Hey traders, welcome to Charts and Coffee. We're taking a look at this post-FOMC morning. We got the no change in terms of monetary policy, which was absolutely widely, if not arguably fully discounted. Although, how do we know anything's fully discounted? Are we taking a tally of everyone? once an expectation for, in terms of target rate probabilities, which is just a fancy way of saying there's something called the Fed Fund futures, which much as we would make a bet on which way gold is going, we can do the same thing with the Fed funds rate. And those futures contracts have been slowly and throughout April painfully unwinding 2 of the 3 expected rate cuts from the Federal Reserve. And, if we look at data and we look at the things that the Federal Reserve chair, right, Powell, says, yesterday he did something very interesting. And I mentioned this in a video that I sent out yesterday, so many of you saw that. He completely undermined FOMC member Bowman's comments about a rate hike. In April, this rate hike narrative started to really gain some traction, because if we're not getting cuts, then the binary way in which most retail traders and investors think is if it's not up, it's down. If it's not going to be a cut, it's got to be a hike, right? But there's stuff in the middle, and seasoned traders know this. And what's in the middle? What's in the middle is very likely fewer rate cuts. 1 is what's discounted. And 2, be careful looking for reasons to expect no cut. So there's 2 things out there that, again, have gained traction. One is the steady target rate probability via the Fed Fund futures. The other, and the reason that a lot of traders are justifying no expectation for rate cuts in 2024, is the Fed swaps. So there's a certain number of G7 banks that the Federal Reserve will sell dollars to. And the rate at which they sell the dollars to them, US dollars, some people will look at, in terms of that rate, the loan, if you will, the cost, not loan, the cost to sell those dollars. They'll look at that and say, oh, clearly there's going to be no cut. That's not necessarily the normal way of looking at it, but those are 2 ways you can look at it. But at the end of the day, it's good to have a metric, right? Rather than I think, I feel. This is not the place of feeling or my opinion, right? If we can stick with data, we know 2 things. Anytime the indices over the last 2 years have transitioned to any kind of downtrend, it's been very short-lived. And the recent downtrend in the S&P is probably going to be no exception. Are we in a bearish current momentum? Yes, there's no doubt about that. We have bearish momentum. It's trying to go neutral. But you take a look at those red candles on the daily time frame, and you can see this is a far heavier market than we've seen throughout this year. The beginning of Q2, April, was the month that we not only transitioned out of the uptrend, but that's the month where the discounting became fast and furious about how many rate cuts are we going to get. Now, remember, we can have fear and greed. We like to, again, think about these very binary ways. But in the middle is uncertainty, right? I'm not really certain how bullish I should be. I'm not really certain how bearish I should be. When we're uncertain, collectively, we don't hit the buy button, right? We tend to hit the sell button. We tend to hit, let's get flat. I don't know. I don't know doesn't cause us to enter things long. It usually causes us to either get flat, which is selling, or engage in a short sell, which is also selling. And we can see a lot of that through April. So let's not get too carried away with the weakness. And remember that it's not unusual for an uptrend as strong as the one that we had in Q1. And let's not just credit Q1. Q4 of 2023 says, hey, what about me? I was pretty bullish too as you wrapped up the year. And all of that is true. So there is a 5-month uptrend that we saw. Take a look. It's now turned into that. Is that panic? I guess for some people it is, but I think when we forget the distance we've traveled, right, and we run into rocky terrain, it's easy to forget that's not the only terrain we've been in. So Make sure you're looking at the bigger picture. Is this a bearish market? No, but what is quite bearish about it? There's two things that I'm going to look at right here with you. And we've come back to this in the free videos. We've come back to this in the Sector Secrets Mastery. And where we are right now is this constant, right? This constant back and forth, right? This constant back and forth through the anchored VWAP, anchored to the first trading day of the year. So we were well above it, finding support at it, moving above until finally, you can see right there on the 18th of April, we got below it, and we've been going back and forth ever since. So if it feels like every day the market's making up its mind about what it wants to do, be a bear, be a bull, you're absolutely right. More often than not, if these two things are in play for a little bit longer than a session, can we stay below 16 on the VIX, right? Can we stay below 16? That's a big number, gang, on the VIX. And can we stay above the daily time frame anchored VWAP? And I'm looking at the ES because that's your best connection to the VIX. Unless you just want to look straight up at SPX. But look, a lot of folks ask, Rog, what about the SPX? And here's what I'll say. If you trade the ES futures and I say, hey, trade the SPY, no one flinches. No one says, oh, okay, Rog, that's weird. Nobody says that because we know that the SPY futures are an ETF that reflect what's happening in the S&P. And the biggest look, now when I say biggest, I'm really thinking about time. The most widespread sort of reflection of all the different financial centers. Oh my gosh, hang on. Hang on one second. I'm sorry, gang. That was my mom. I always answer my mom's calls. Sorry. She's like, oh, I thought I was calling your sister. All right. Sorry. Anyways, so we're taking a look at if we're taking a look at the S&P and the VIX. And where was I? I completely lost my train of thought. As soon as my mom calls, especially at an odd hour, panic overcomes. All right. So if I'm taking a look at where we are, if it feels like every single day we are trying to figure out if we're bullish or bearish, back above the VIX is a really good step. Back below the 16 on the VIX, back above the VWAP on the S&P. Oh, that's what I was talking about, the SPY. So if we're back above the anchored VWAP on the S&P futures, why are they the broadest look? Or as I like to say, the biggest look. It trades 23 hours a day. We get to see what's happening in the Asian session, the European session, the UK session, and right up into the early part of the US. 23 hours a day. This is reflecting an opinion with reasonably good open interest in volume in the S&P. So if I say, hey, look, this is happening on the S&P, let's buy SPY ETF, no one's going to say anything, but it works the same way with SPX. And the cool thing about the S&P beyond that 23-hour clock is the fact that I can get volume reads on the ES, and that can be problematic on the SPX. So why not use a place that reflects the same darn thing? SPY, SPX, ES futures, micro ES, what's it matter? Choose your own adventure, right? If you say, Rog, I'll look at the ES as my touchstone, which is really what it should be, and then I'll express that opinion in ES or MES or SPY or SPX, knowing that at the beginning, at the bell, remember, this has a running start. S&P's already been digesting the opinion of the Asian session and Asian close, European, UK, early US. So when the bell rings, there's already a lot of opinion baked in here, volume, volatility. We had our 8:30 hot zones with initial claims. That's already been baked in. So we can get a certain idea of what we could get when the bell rings. And so you're not waiting for the first 20, 30 minutes, hour to pass by before something forms on a more 9:30 to 4 o'clock window, right? So think about the edge you get by looking at something that moves 23 hours. So I thought I'd mention that because, this is something that this morning, here we are moving higher. And look, how many folks have been trying to call tops and call bottoms? This is chop, right? This is really mostly slightly bearish chop. So let's keep that in mind and not get too committed, frankly, to the long or the short side. Now, for me, I tend to be a little bit more of a bull. I think we all have a tendency to do something. We all have our biases. Mine, I tend to be bullish. It serves me more often than not, right? The NASDAQ is not in that same spot above the anchored VWAP. I think it's worth noting that. NASDAQ is heavier. And the Dow, also pretty darn heavy. What about the Russell? Take a peek. Not as heavy as the other two. It looks like it might want to conquer that VWAP, but it's had a look at how tough a time the Russell's had at since the in this case the 12th, since the 12th, getting back above that VWAP. This is sort of that bearish side where, yeah, follow through to the downside might be a little bit better. All right. So with that being said, let's grab some questions here. I'll pass on the highs to my mom. All right, first up. Hey there, Philip. Taking a look at Google and Exxon. All right. So Google's been a relative outperformer in terms of other NASDAQ stocks. The XLC, where it resides, has been, by the way, XLC as one of the 4 cylinders, technology, communications, which is what XLC is, consumer discretionary, and semiconductors. XLC and SMH led the charge in Q1. SMH has had a vastly different Q2 experience. It's quite weak. It's down near the bottom of the month to date. But the sector that's remained pretty darn strong is communication. That's where XLC resides. And by the way, same thing with Meta. If we can get a Google set up inside the gray zone, now that we've got the FOMC behind us, there is a small window between now, today, and tomorrow's non-farm payroll. So this is going to be a little tricky because non-farm payroll is going to add yet another massive macroeconomic volatility hot zone, right? Meaning we heard from macro itself. But Powell is the macro. What he says is the reality because his reality dictates monetary policy, dictates the main messaging of the Federal Reserve. Even though a lot of the other members run their mouths, Powell did, again, something really important. He completely undermined what FOMC Bowman's been running around saying for the better part of a month, right? He reminded everybody, I am the mouthpiece for the FOMC, and he is. So he took rate hikes off the table before a cut. So let's just let that settle down. Should that be bullish to equities? Yes. Is it going to be as bullish as 3 rate cuts? No. All right. So Google would be viable. It's in a strong part of the overall market, meaning if I'm looking at the NASDAQ, the S&P, and the Dow, this is one of the stronger sectors. This is one of the stronger stocks in the sector. So there's a bit of alignment there from sector to stock. Daily price movement range, the challenge will be what's the window? Do I want to put on something more along the lines of a short-term swing with the goal of possibly being flat by the end of the day so I can go into non-farm payroll kind of with a blank page and then see what probably the second most important hot zone, aside from any time Jerome Powell opens his mouth, could it make sense to look at 1 hour short-term swings with the window to maybe close the trade out today available to us? That would not be a bad thing to have. As far as Exxon, I would tap the brakes there. All right. Okay. So that is what's going on with Google and Exxon. I would say Google, yes. Exxon, no, Philip. All right. Okay. Can the ES be used to get an early trade on the SPY? I don't want to do that, David, because SPY, now when you say early, I guess we need to define early. Pre-market? No. After the bell? Sure. All right. Next up, JCW says, I purchased JP Morgan 205 May 17 options. I don't know where you got them from. So I cannot tell you to get in and get out. Again, here's what I'll say. When you got in, you know what you paid for. Risk a percentage of that premium, right? Know technically where your trade could be wrong. So there's two different things that we can look at. We could look at what the technical validity or the price-based volatility volume, whatever it is. So let's just call that technical validity of the trade. Know where that is, right? Where is the trade no longer valid? What is the point of validity, as I like to call it? And then also ask yourself, how much of that premium am I willing to risk before I know I'm quote unquote wrong? It should not be all of it. In fact, in my experience crunching numbers from thousands of trades, I would say it really isn't many more than 50%. So that being said, we've been holding pretty well in the daily price movement range in a neutral environment with neutral candles. So, I don't think there's any reason to panic here. But again, I can't really tell you what to do with your trade because I really don't know the details I would need to know to be able to do that. But as far as a pure technical read, this is where I say, if we're going to see some support, take a look. Not only did we trade into the daily price movement range on the 30th, we did so yesterday too. I would expect that to hold. All right. All right. Next question is XOP chop or bearish? Dave, it depends on the time frame, right? One of the things we do in the mastery, and I think this is really important, gang, and I would say this applies to all the rooms, although, I'm going to focus on the mastery. My Sector Secrets mastery is one of the things I encourage the traders to do. And I see a lot of sort of the chat room, like a top 40 show where you call in your favorite song. What we want to do instead is say, hey, what time frame am I looking at? Right? Okay, Rag, I'm looking at Exxon 1 hour or Exxon 5 minute or Exxon whatever the time frame is. From there, I'm looking at, do I want to be a bull or a bear? Rag, I'm looking for an Exxon bullish play on the 1 hour or whatever it is. And I'll tell you, gang, when you give us that kind of detail as to what you're looking for, I tell my mastery members this all the time. I'll know better what you're seeing. I can help correct any misreads, that I perceive. And then I can say, all right, this is what the trader is doing. So, what time frame, Dave, right? That's the first thing I'm always going to ask because the time frame matters as much as the symbol, right? The time frame matters as much as a symbol. I would say both are largely, for now, bearish, but not in a downtrend. So chop or bear, it's really, is it choppy or is it in a downtrend? Which is what I presume you mean by bearish. Right now, they're both bearish, but they're not in downtrends. I would be very cautious buying Exxon. This was one of the stocks that I liked until it printed that red candle. But what about its sort of not counterpart, but what about its second heaviest weighted stock in the XLE? That would be Chevron. I would say Chevron. So this is a little bit less about, oh, sorry, you put XOP or XOM. Sorry, the lights. Sorry about that, Dave. Well, actually, that's a good breakdown of the XLE. Keep an eye on Chevron. As far as XOP goes, yeah, that's not in a downtrend either, Dave. Thank you for the question. 2 red candles. But again, if I'm talking about the daily, which is the broadest opinion of any symbol, no one's gauging their day-to-day opinion of a stock or anything based on a 1 hour or a 5 minute. Day to day, we're looking typically at the daily. So if I'm looking at the daily, kind of same thing applies. Is it bearish? Yes. But is it in a downtrend? No. Is it chop? Yes. So it's bearish chop. It can be both, Dave. Yes. Thank you for the question. It can be both. However, Dave, if you were to give me the specificity of, hey, Rag, I'm looking at the 1 hour. Is that in a downtrend? We could argue that is definitely more not just bearish, but also that bearishness has organized into a downtrend. The sentiment is bearish, but now the momentum has persisted long enough to make for a bearish trend. So that's where I would say hour could be bearish. But remember, we're getting the bell in 12 minutes. We'll see where it goes after, say, 10 a.m. Let's see how it settles down. But that is not somewhere that I would look for a buy, but it's not quite a no on a short or long puts, I should say, on the 1 hour, which also does a couple of things. It shortens the days to expiration that I would require. It shortens the time horizon as well. Thank you for the XOP question, Dave. All right. So Chevron, though, since we're talking about energy, that would definitely be something to keep an eye on in terms of and I'm looking at my Simpler Essentials room. Gosh, I need to move these lights. They are pretty blinding. No questions from the Essentials room. All right. So yeah, I would say Chevron if I'm looking to be bullish in energy, and keep a really close eye on crude oil itself, because if I'm looking for alignment, there's not necessarily index sector stock, although Dow and S&P would be a little bit more applicable to energy. But really the top of the food chain is crude. So be careful here, gang. We are reaching the VWAP, which since we did not hold at the 200, the VWAP could be that next level for support. But that's what I'm looking at. So be cautious with crude. And remember, XOP is not only a crude oil conversation, but it's a natty gas conversation as well. Many natty gas company stocks are parked in XOP. All right, gang, that's a wrap. As always, thanks for being here for charts and big mugs of coffee. I will see you all tomorrow. Same time, same station. Be good to each other.